You've seen the headlines, right? $1 equals 83 Indian rupees. But what if I told you the real story behind that number isn't so much about a weak rupee as it is about a super strong dollar? Today, we're going to pull back the curtain and uncover the hidden forces that make this number tick.
83. You know, this isn't just a number you see on a currency exchange website. It's the result of a massive global tug-of-war. It's an economic battle that affects literally everyone, from a student in Mumbai dreaming of studying in New York, all the way to a tech CEO in Bangalore. So what is really going on here?
So when we see this, should we think it's a bad report card for the Indian economy, or is something else, something bigger happening? To figure that out, we got to pop the hood and really understand the engine that drives these numbers.
And that brings us to our first stop, this huge, invisible marketplace where money itself is being bought and sold 24/7. See, to get the why behind 83, we first have to get a handle on the how.
Okay, so at its core, an exchange rate is just a price tag. That's it. It's the price of one currency in terms of another. So when we say 83 rupees to the dollar, it just means $1 costs 83 rupees to buy. Simple as that. And you know, just like the price of coffee or a plane ticket, it all boils down to one simple, timeless concept: supply and demand. The only difference is, this isn't your local market. This is a global marketplace that never, ever sleeps. Let's break it down. It's really just 3 easy steps. First, when tons of people and countries all want to buy a currency, like the US dollar, you've got high demand. Second, if there isn't an infinite amount of it to go around, you've got limited supply. And third, well, the price has to go up. That's the basic engine driving this whole thing.
Okay, so we've got the basics of supply and demand down. Now, let's zoom in and look at the actual forces that are pushing and pulling on the rupee right now.
Now, here's something that might surprise you. A huge part of this story isn't really about the rupee at all. It's about the dollar. See, when the US central bank, the Fed, raises interest rates, it's like putting up a giant neon sign on American investments that flashes, "Get great returns here." Investors from all over the world see that sign and they rush in. But to invest, they first have to buy US dollars. That creates a massive surge in demand. Then you add in the fact that crucial things like oil are priced in dollars, and you've got the perfect recipe for a super strong dollar.
And just look at this chart. That jump in US interest rates isn't a tiny little adjustment. It's a huge policy shift that acts like a powerful magnet, pulling money from all over the globe towards the US. And that, of course, makes the dollar incredibly strong against pretty much everything else. Of course, it's not all about the dollar. India has its own economic gears turning. Take the trade deficit. Think of it like your household budget. If you're consistently buying more stuff than you're selling, you've got to pay for it somehow, right? Well, for India, that means it's constantly selling rupees to buy dollars to pay for all those imports. And that puts a kind of gentle downward pressure on the rupee's value.
All right, so we've talked about the how and the why. But what does this number, 83, actually mean for real people and businesses? Well, that's where things get interesting. Because in this currency game, there are always winners and losers.
Now, this is so important to understand. A number like 83 isn't just good or bad. It's totally a double-edged sword. On one side, you've got the winners. Think about IT companies whose services just got cheaper for American clients, or families getting more rupees for every dollar their relatives sent home. But on the flip side, you've got people facing headwinds. That student whose tuition in the US just got more expensive, or importers who have to pay way more for electronics.
I mean, just imagine for a second, you're the CEO of a tech company in Bangalore. Your biggest client is in California and they pay you in dollars. All of a sudden, every single one of those dollars is worth more rupees when it lands in your bank account back home. That's a huge boost. It means more money to hire engineers, to expand your office, to innovate. It's a massive tailwind for India's entire export sector.
So, we started this whole thing off by asking why the rupee seems weak. But now that we've seen all the pieces of the puzzle, we have to ask a much better question. Is weak even the right word to be using here? Okay, now get ready for this, because this chart kind of changes everything. When you look at how the rupee has performed against the US dollar, yes, it's down. But then look at how other major world currencies have done. The rupee has actually held its ground better than the euro, the British pound, and especially the Japanese yen. So this isn't a story about a rupee that's in free fall. It's actually a story about a rupee showing some serious resilience in the face of a globally dominant dollar.
And that right there, that is the real story. The headlines might be screaming weak rupee, But the reality is so much more about a strong dollar. It's all about perspective. That number, 83, tells us less about the Indian economy on its own and a whole lot more about its position in a global economy that is, for now, dominated by the US dollar.
So, the next time you see that number pop up in the news, just ask yourself this: is it really a report card on a country's economy? Or is it just a price tag in a giant, complicated global marketplace? As we've seen, the answer is way more fascinating than the headline lets on. Now go out there and question the numbers.